What is going on, guys? It's your guy Maverick here with the Traders Guild. Today, we're going to be getting into prop firms and cash accounts and which one is more beneficial, right? Should I go the route of passing challenges so that I can withdraw and I can make money, or should I go the route of funding my own account, making my own money so that I can become a profitable trader? Let's see. But that's what we'll be talking about today, and we'll get right into it. All right, all right, all right. For those of y'all who don't know me, my name is Maverick. I'm founder and CEO of the Traders Guild. Our goal here at the Traders Guild is to create a coalition of professional traders, individuals who are actually able to rely on the income of trading, not just hope for it and do it as a hobby. Now, again, and anything we talk about, as you saw in the disclaimer, not promising any profits to anybody. Everything is, nothing that has happened in the past does not indicate anything that's going to happen in the future. But everything that I'm talking about is of my own experience, based on my own thoughts, just for educational purposes. And I'm just sharing what has worked for me and what is working for individuals that I've worked with and individuals that I know or that I've been mentored by, right? So at the end of the day, I have been trading for 5 years now. I've been trading since 2018. It's 2023 now. I've been able to make tens of thousands of dollars trading. I've also been able to lose tens of thousands of dollars trading. Gratefully so, I've been able to be in the profitable end of that, right? I've been able to fund my business, right? I've been able to fund myself, fund my lifestyle, and even now being able to fund multiple challenges, being able to take those challenges and looking to go ahead and get to bigger withdrawals in that process, right? So I've gone through all types of up and downs in this journey. I've seen myself making money. I've seen myself not making money. I've gone through losing streaks, winning streaks. I felt like the best trader in the world, and I have felt like I didn't know what I was doing. And these are all different, aspects to the life of trader, and honestly, the life of any entrepreneur, athlete, anybody who is using a skill set to make money. You're never going to be 100% perfect, right? But the question today, right, is the route of, in today's world, there's a lot of things going around, a lot of people talking about the prop firm bubble, right? People getting caught up in just only taking these prop firm evaluations, or there's people who say you shouldn't do prop firm evaluations, you shouldn't try to get funded, you should just focus on growing a cash account. There's so much polarity in the trading realm, right? It's always black or white. It has to be this way, it has to be that way, which I guess would make sense because it's such a decisive career. But at the end of the day, I do both, right? And I've been able, like I said, to even fund multiple challenges because I'm profitable, or able to make a profit consistently when it comes to my live and personal trading income, right? I'm also able to be comfortable and not necessarily feel stressed if I haven't passed an account, or if I'm not funded at a moment in a funded challenge or with a prop firm, because I know that I can rely on my own income, right? So of course there's going to be benefits and downsides to both sides of the spectrum, right? And I think long term, everyone's goal maybe would probably be to have your own capital. I think if it came down to being able to have $100,000 in funding that you can only withdraw every certain period of time, and you have a specific drawdown limit, and versus having your own $100,000 capital, which you get 100% or majority of the withdrawals from, minus fees, that you can withdraw whenever you want to, and you didn't have anybody telling you what percentage of drawdown that you can handle in a day or in a week, what trading style that you're able to take when it comes to swinging and intraday trading and position trading and all these different things. I think we would all take the route of having our own capital and our own income. But I really do love the opportunity that prop firms are offering to individuals, right? Again, I mean, it wasn't always that I was confident and would be confident putting $2,000, $5,000 into a trading account to make a reliable income off of a lower amount of risk on a regular basis, right? There's a lot of people who are maybe only willing to foot the bill of 150, 200, maybe even 500, sometimes $1,000 that they're willing to put out of their own money of risk, maybe even on a month to month or on a continuous basis. And these prop firms offer the ability to get access to large amounts of capital with a relatively low overhead, except for the time spent and the actual skill of passing the evaluations. And get access to that and make anywhere from 80% to 90%, sometimes even 95%, a little red flag, but 95% of your withdrawals, right? And the money that you're able to make in profits. So I love the opportunity. I think that it's phenomenal, right? I offer trainings on it. I'm looking to continue to get funded with more accounts myself. I'm looking to help more people, get funded. So if you're not familiar with the Traders Guild, definitely check the description below or hit any button that appears on the screen here and go ahead and get access to our free market outlooks. Go ahead and join our server so that you can get access to those market outlooks and be a part of that, right? So at the end of the day, when it comes to the prop firms, I think that it also, as well as giving you access to large amounts of capital, it also enforces risk management principles where a lot of us, I'm not gonna lie, when I first got introduced to trading, like the first year and a half, I was being taught in the environment that I was in. Well, I mean, we were risking 3 to 5% per trade, like every trade. I'm not gonna lie to you. There was some days we were risking 10% per trade, and it was like normal, right? Blowing trading accounts over and over and over again. I've blown so many trading accounts. My first blown trading account was on gold. It was horrible. But at the end of the day, it's just when I got introduced to prop firms and the challenges of prop firms, it really stilled me as a disciplined trader, right? I'm just gonna be fully and transparently honest. Like even after gaining a level of consistency in my own profitability in my cash account, trading with the prop firm evaluation where you have no choice, like you just put $500 on the table for a 100K evaluation, 200 and some dollars on the table for a 50K evaluation. I was not about to just like throw it away and over leverage, in their definition of over leverage, which puts you at about on average 5% drawdown per day and 10 to 12% drawdown at all ever on the account. You can't even go any lower than that. So it really it's made me sharper, right? It's made me sharper. It's made me better when it comes to decision making. And so that is one of the things that I think is key. The other thing is that if there is a time limit, it also forces you to show up to the market on time and consistently. One thing that I've noticed with a lot of the members in the guild or just students that I've had in the past, a lot of people struggle with even just making it a priority to show up to the markets, right? Even though we're day trading, it doesn't equate to everyday trading, but oftentimes, especially in the beginning, you probably should be showing up every day, or you're not even like giving yourself the opportunity to get an opportunity to day trade. And so you end up kind of messing up the numbers, if that makes sense, right? If at the end of the day, if I know that I'm going to have a 50% win ratio on a coin toss, right? I flip a coin, it's going to be heads or it's going to be tails. And 50% of the time, I'm going to be right. And I know that 1 out of 10 times, I'm going to be right 5 times. And so I plan to make 5 wins on the month, but I only show up 5 times. I only show up 4 times. That greatly diminishes not just the probability, it diminishes my plan, right? And so at the end of the day, it's kind of similar to a basketball player, right? If you are someone like LeBron James or Kevin Durant or Stephen Curry, right? You're the scorer for your team or one of the leaders on your team, and you're not taking shots. It's just kind of like they kind of need you to, whether you're gonna miss or whether you're gonna make it. You have to take the shots. And so I think a lot of people, they struggle with even taking the shots because they're afraid of losing money. And what I noticed is that there are some people, maybe not for everybody, but there are some people that the time limit on the evaluation actually makes them have to show up and face their fear, face their inabilities, face their lack of knowledge, and it kind of like forces you to grow, right? So that's that part. The other thing that I would say about prop firms that really stands out, and it's just like, I'm not your accountant, go get an accountant, but tax wise, there are certain tax implications that having a funded account once you're getting withdrawals comes with, right? Because when you're making money off of your own trading account, it can be counted as, I believe, capital gains. But when you're trading from a prop firm, that's a 1099 that they're paying you out on as an independent contractor. So you're able to actually avoid certain, not avoid, but you're paying a different style, different type of taxes, and actually less taxes, especially depending on the state or country that you're in. So I think that that's also a benefit of the prop firm culture. Now, there are a few disadvantages, and I mean, there's several videos all over YouTube bashing prop firms. So if you like to dive into disadvantages, please be my guest. But I'm not here for that, right? I'm just kind of pointing out that when it comes to being a beginner trader, passing three phases of profits before gaining a portion of any portion of a withdrawal is a high barrier of entry or return on investment. When I look at it, and in my opinion, right, there's no business that I'll start that I can't like make money now, right? And I'm just, even if it's not going to be a career, it's just like if I start a t-shirt company and I sell 30 t-shirts but I don't get to make anything, like I'm talking about anything, you don't even make the money back on the t-shirt, right? That is you're not going to stay in the t-shirt business very long, right? So there are people who, maybe have an entrepreneur's mindset. Maybe they're used to, being able to make money, period. Having money to put in isn't the problem. Maybe they do have money to invest into the markets, whether personally or into funded evaluations, but you come into an opportunity and the first thing people introduce you to, you have to like prove yourself to make your money. It's kind of like, F this, like I'm gonna do something that I can put my money in and I can lose it or not, right? So I think that that can be a disadvantage for a new trader, even though, like I said above, you learn a lot. You can definitely learn a lot from the funded evaluations, but I feel as though it's, even in my own, over the last couple months, even if you go back through the Traders Guild page, I haven't talked a lot about my live accounts, right? I've talked a lot about my prop firm journey, my prop firm challenges, but I do want to get back to talking more about the journey of just funding your own cash account and getting to it, right? And I feel like that is phase one for a new trader. I think that is phase one as a beginner, is to fund up, and whether it's $100, whether it's 500, whether there's 1,000, whatever it is that you're willing to lose is what you should fund up with. At the end of the day, right? I wouldn't put anything into any business that I wasn't willing to lose, because no business is a guarantee. Not just trading, no business on the planet is a guarantee. So it's just like, at the end of the day, if you're gonna put that up, I just think that it's better to experience that firsthand, when it comes to having your own money in there. And maybe I fund $100 into an account and I make $20 in a week, and I can literally take the $20 out immediately. Like that is like, that clicks in the brain. Or maybe I put $100 into account and I lose the $20 in immediately. It's not just a demo. It doesn't feel like I just lost like Monopoly money, or I lost just the challenge. No, you literally lost your money. You literally traded and lost your own money, and so you learn from that. So I think that that can be a disadvantage for starting off as a beginner in the prop firm world. 10% drawdown is cool, but it's the equivalent of blowing an account at 10% drawdown. Like, I just like, sometimes when I think about it, it's like, if you're gonna go 30 days and basically put in $200 for a 50K evaluation, and you're gonna go 30 days, and if 30 days goes by and you don't pass, you lose your $250. Or if you lose 25, 10% of that, which of 50K is $500, right? Which is really your 250. You lose your 250, right? That's a little bit, it's like, percentage wise, like if I was gonna lose the whole $250 for losing 10% of the account, well, I mean, I might as well have just risk the whole 250 on my live account, right, in 30 days, and just do that every 30 days, right? So it can come off like that. The offset for that I usually, kind of put out there, recommend, is like, don't I personally don't buy evaluations anymore, right? I don't buy challenges or evaluations that I'm not willing to repurchase right after. So like if buying a 200K evaluation right now and failing it within the next 30 days is going to put me in the hole, or I'm not going to want to buy another one right after, like it's going to sting a little bit, then I'm just not going to buy the 200K account. I'll just buy the 100K account. Or if buying the 100K account is going to do that, I'll just get the 50K account. Or if doing the 50K account is going to do that, I'm going to just get the 25K account. You know, like that's the way that it is. I think it's better to have, when doing the challenges, it's better when I have two or three back to back that I can do, because really babysitting the accounts has not done me well. Like every time I've passed a challenge, whether it be phase one, phase two, it's always been, I'm not gonna say like fast, but it was fast, right? I mean, I've passed challenges in a day, passed challenges in a week. So I just feel as though when you babysit the account, it puts you in a lack slash fear mindset, and you kind of like start passing up on trades that you shouldn't. You mess up your risk to reward because you're getting out of trades early. You're not taking partials properly. You're moving to break even too early. You're not taking trades right at all. Like it's just, or you babysit the account and the 30 days goes by, and you either fail because the 30 days goes by, or you have to start over, or the worst is that you have to like overly risk the account on like the last week because you just weren't taking enough trades. So I think that can be a little bit annoying. And then the other thing is that even once you're funded on with a prop firm evaluation, you can't withdraw on demand. And like you can't like say you wanted to be somebody who you made money today and you withdrew today, or you made money this week, you withdrew this week. Every prop firm, and the majority of them, don't allow you to withdraw until every 14 days or every 30 days, right? So that can be something that is a disadvantage or can offset, or whatever the case is for somebody when it comes to funded accounts. Right now, cash accounts, I think of course they have their disadvantages. You can blow your money, first and foremost. You can blow your account. You may not have enough money to where like you feel like it's a reasonable return on investment, which is a psychology thing, and we'll go over that on day 3. So if you're watching this, you can either go find day 3 or go ahead and join the Traders Guild so you can gain access to it. But at the end of the day, cash accounts can provide you the opportunity to even make small contributions to your lifestyle and to your trading journey, right? I mean, we've said that, I've said this like, and I've heard it from other people since I started trading. It's like fund a $200 account, fund a $300 account, and just focus on paying one bill. Right? Don't focus on making thousands of dollars that month. Just focus on like if I got $300 account and I can make $70 on the month, then I can pay, a phone bill. I can pay for some, a dinner. I can pay for, whatever, grooming, right? Like whatever, you can pay for a small bill with that. Or if you put $2,000 in a trading account, which for me, I rarely will put less than $1,000 into a trading account anymore. It's just like, at the very least, you grow that account by 20-30%, that's an extra 200-300 bucks a month. I mean, the live account by itself can pay for more evaluations. Do you get what I'm saying? So it's like, if I know what I'm doing on my live account and then my evaluations are paid for, and then I can be a little bit more aggressive on the evaluation because I know every month that live account is going to pay for an evaluation, and I don't have to babysit the evaluation. Now I can maybe trade an evaluation in the span of a week or 2 weeks and be a little bit more aggressive when I see opportunities, and not be mad if I'm going to lose a trade or lose the account or whatever the case is, right? So there's that. So that's definitely a benefit. Now, the other thing about a cash account is that they can be risked a bit more aggressively in a proper vacuum, of course, right? Because at the end of the day, like if I'm willing to, like I said earlier about the funded account, like if I know that I'm willing to lose 5%, or if I know I'm willing to lose $100 on a month because I bought a 25K evaluation, or 250 on a month because I bought 50K evaluation, then I'll just be aggressive with I could just be aggressive with my own money, right? And I can be willing to put $100 into an account or $150 into an account because I'm willing to lose that 100 to 150 bucks that I would have lost if I failed the evaluation or if 30 days went by anyways. And then I can be willing to risk 5% a trade, right? And if I lose 5% or if I lose 10% on the day, then I'm done for the day. I know I'll survive 10 days, and I'm willing to lose that. I can put that money back into the account. I mean, it's your trading strategy. Nobody can tell you, that you're crazy. I don't think there's a difference between putting $1,000 into a trading account and being willing to risk a certain portion of that $1,000 on a month versus putting a portion of the $1,000 into a trading account and then only being willing to lose that entire portion, right, by risking that. And if I'm going for 1 to 2s, even risking 5% on that, then I'm putting myself in position to risk 3 to 5% on the account per trade and make 10%, per trade, right? 15% on 1 to 3s, and don't get me started on 1 to 5s, right? 1 to 8s and things of that nature. So they can be risked a little bit more aggressively, and nobody can tell you like, oh yeah, if you lose 5%, well, you just lose everything. But no, if I lost 5%, I lost 5%. If you lose 10%, well, you lose everything. No, if I lost 10%, then I lost 10%, and we're gonna go back in there and get it back, right? So it's just again, it's all psychology, it's all perspective, and I think that they work hand in hand together. I'm not saying that prop firms suck and you shouldn't trust them. You should definitely do your own research, Dior, and make sure you're going with the right companies. And I'm not going to say cash accounts are the freaking worst because you can't make any money. Like, that's stupid, right? I think that they should be used hand in hand. And if you're going to be serious about trading as a career, you should really see the bigger picture, right? Not just the dogma of one thing working over another thing, or one person liking this and one person not liking that, or just because you're not making money yet, just jumping back and forth from what everybody else likes. It's just like not gonna make sense. I think that as a beginner trader, a cash account can create a sense of reality, kind of going back to the first point about the cash accounts, where it's like, somebody at the end of the day, if you got to go through three evaluations, like you pass phase 1 passing 10%, you pass phase 2 passing 5%, you've already made 15% that you can't even withdraw, right? On $1,000 account, if you just made 15% and you're a beginner trader, you just take out $150. Like, that's like wow, like that was real. Like, that was like, I did that, and then whatever you would have made on the third phase to actually withdraw the money. So I think that that's key. The other thing is that when you lose, it's a sense of reality that you actually lost your money, right? And you're not just, well, I guess I failed the evaluation. Like, no, that was your money that you lost. So I think that that is something that stands out as well when it comes to it. Because when you realize those losses and those gains and they're real, it can affect your mind differently than when it's on a demo account or an evaluation or a challenge, and you just lost some money, or you just I just feel as though the chemicals in your brain, the wires in your brain, especially when you're a beginner, it can really put you in a different mindset. Now, of course, prop firms, people say, okay, well, I can pass the prop firm and I can take the money and I can fund a live account. That is correct. But I can also take the money from a live account and fund a prop firm, right? So again, they go hand in hand. I don't think that there's one specific route to go. I think that both are necessary in the trader's journey, and everyone should experience both. I think specifically, though, that in the order of a live account to a prop firm can be a lot more fulfilling for a beginner trader, and it has been a fulfilling journey for me. I can only imagine if I would have started trading and like never been able to like realize profits within my first couple weeks, or realize losses. And I'm a hustler, that's me. I've had multiple different businesses. I'm a full-time entrepreneur. Even outside of trading, I haven't worked a job since I was like 19. Like, there's been like 7 years, right? So I have that gear in me where I'm going to go get money and I'm going to invest it and I'm going to put a business to work. So if I'm going to start to trade, and if I'm going to put money into trading, I would like to see how this thing can lose me money, and I'd like to see how this thing can make me money. But every trader is different. Every trader situation is different, especially when you're talking different ages, different countries, different experience levels. So don't get caught up in the dogma of one style, one way of trading, and one solution. So this week, over the next 3 videos, I'm going to be going over the psychology behind a cash account. We're going to focus on cash accounts this week. I'm going to be going over the psychology of trading a cash account versus trading a prop firm. I'm going to go over regulated brokers versus unregulated brokers. I'm going to be going over our personal trading model, like my go-to trading model, right? It's a mixture of smart money concepts and institutional ICT concepts, which is like one and the same. But I learned smart money and then I was introduced to ICT. So that was like the Cavalier model is what I call it. That was my first and my go-to. If I could only trade one way, one style, and be relying on that to make an income on any time frame, on any span of time, that's how I would go about doing it, right? So if you're in the Traders Guild, we'll be doing this 8 p.m. each day this week. I'll go ahead and upload this recording to YouTube. If you're watching this from YouTube, really appreciate your time, really appreciate you watching this. Like I said, our goal here in the Traders Guild is to do two things. It's to educate and empower traders to actually be able to make a reliable income in this field and bring a new light when it comes to Forex trading, currency trading, and indices trading. Just continue to grow that realm. I love the work that we're doing as a community. And the other side is to actually create a community and of empowerment and individuals who are accountable to being able to be successful at this skill, right? Just being around the right people who are actually doing this thing, making money, living their life, funding businesses, and who knows, you might be able to find other entrepreneurs and other traders that you can start a business with, start funds with, whatever the case is, get into different investments with. So that is our goal. So you can go ahead and click the link in description and join the Traders Guild. Like I said, we have a free side where you can get access to our market outlooks and you can get access to the private community and the coaching until July 1st. It's going to be open until July 1st. After that, we'll be doing intake questionnaires for people who are wanting to join the guild. So I appreciate you guys watching this video. Check out our institutional market structure playlist, as well as our market outlooks that release each week. And I will see you guys on the next video. Let's go.